The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technician's Hour on the 15th day of May, mid-month. And it's been a fascinating month so far. Whoops, telephone, let me just make that a little softer there. There we go. Okay, so what we're looking at here is the S&P E-mini is down 26. Has made a peak C. It hit the 2741s. 2744s is our upside target in this particular up move. So there should be some more to go if this really is a buy mode peak C being formed today. Stochastics at 93% in the daily. MACD is still strong. No reason why we shouldn't expect at least a test of yesterday's high over the coming couple of days. 120-minute chart you'll see right here. Look. Okay, that's the, there we go, make that a little softer. You see this declining trend line right here? It hit it. There's a left side, right side price time match. It says that if we were to take out the low of today, which is 2703, we're at 2705.75 right now, that would probably start, let me just double check here if that is a trough C. 0325, 0325, 03. So far, this is still leg C to the downside. There's a chance that we might have to test the left side low of 4 o'clock in the morning. Was it 8 o'clock in the morning on the, what date is that? 10th? Oh, that's today. 120-minute chart, could that be today? But he said, oh, the 15th, from a few days ago, 5 days ago. And that low was 26, what did I say it was? 26.96.25. That's going to be a test. A close below that would say that this is going to be a deeper pullback than I anticipated. Subscribers and I were expecting there'd be some give back today of the big gains that we've had. Thought that yesterday, but yesterday was a really nice update and a pretty decent close considering that we already started the consolidation. When I was doing my show yesterday, I said, I think this could be the intraday high. And so far, that's been the intraday high, 2741.25 on the E-mini. And that was made right there at noon, that hour yesterday. Now, a couple of things. So the 120-minute chart gave a peak D, a pretty good turnaround signal. And now, of course, we're in this consolidation phase. Now, what's really interesting, in one day, we've given back 245 points. It feels like, whoo, that's a big chunk of money. But if you look at the E-mini, we're only back to 3 days ago, into the middle of 3 days ago, and 2691 is the 9-period exponential moving average. So let's just follow this closely. I'm expecting that this H pattern now, this is what I wanted to talk about. You see this, a couple of questions that I've had, because there are some Chapman waivers that have studied the technique for so long, that they're aware that sometimes you can get the lowercase h, it goes to a lowercase m. What happens in the retracement of that second arch formation? Does it go toward or above the previous arch high? In this case, would be all the way at 2882.25. Right there, made the week of the second. No. That was the all-time high. That would be 2807.25, made the week of the 16th of March. And we're only at 2704. That's a long way down. So this is a second arch. Now, let me show you something in my CD introducing the Chapman wave methodology. For years now, I've discussed this pattern called the lowercase h, which eventually has the potential to become a lowercase m formation, and that m formation can continue for a while. The big thing about it is if it closes decisively with 2 bars, 2 out of 3 bars, closing sharply below the left side low of consequence, you could actually have a much deeper correction. If, in fact, you're bouncing and it's starting to form tremendous support around about that left side low, that arch formation can go twice. It can go 3 times. It is rare for it to go 4 times. If it goes 4 times, you are stuck in that mode of trading range arch formations and little W or cup formations rebounds for a long period to come. That's why the strength of this rally is going to be very important. Look, here it is. Traded H becomes an M and an M as it goes sideways within a fairly narrow range. And that's very frustrating unless you're able to trade at the very bottom and get out of the top and keep doing it until you're wrong. So let's just put this into practical terms. In practical terms, in the next 2 weeks, going into the end of May, and I would even say the first week of June, if there is a close in the E-mini, well, it will be June. Yeah, it'll still be June. If there is a close in the E-mini below 26, I'm going to make it 26.70. There's a real good chance that we, in this M formation, the arch formation, going down towards the lows in the 2600, 2650, 2600 area. I don't think this one's going to go deeper than that at this point. I'm not sure, but I don't think so. And then there'll be another rally. And it'll be that rally that's the most important rally, because that's the one that has no choice in my work of these patterns to really scream into the 2770s or higher. Okay, I think we've covered that to death. Now, let's just go on. The Dow, right now, is down 235 at 24,664. Where does it take us? It takes us into the bar of just 4 days ago, and it has 24,570s as the 9-period exponential moving average. So that's about 80 points from here to the downside. Most importantly, you've got this H to M pattern in the weekly chart, and you've got a peak G that has just formed in the 120-minute chart. So this could be a little lengthier out of the corrections. But what's really important now is that monthly chart halfway through the month of May, now we're starting to get a good feel for the parameters to watch going into the close of the last day of June. Remember now, I've extended May into June. Why? Because 23,300, I'd say 23,300 itself, but let's go to 23,000s. I think that's going to be absolutely key. A close below 23,300 says watch out, because that millennial level of 23,000 is going to become really important for this red dash trend line support. The MACD would then close below the green, the fast-moving average differential, 9-period differential, will close below the red slow-moving average, 26-period moving average, and the stochastic probably will be down to the 53% area. If that happens, that's going to be a pretty darn serious thing, and I'm going to go into that in a few minutes. But on the upside, if there is a close above last month's close, that is April's high of 24,858, that's really positive action. And that says you've raised the base of support. All right, let's just go on. SPX, so S&P is down 24 at 2705, it has 2696 as a 9-period exponential moving average. The QQQs have had a very nice rally. Now they're stalling, just tapped down after a leg E. This is a peak E. MACD is good. Stochastics are 93%. I'll go on with this when we return. Dow's down 242 off the right.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back. So I'm looking at the comp index, which is down 75 at 7336. I was asked if I would look at the comp index because it obviously is way broader. It's not the NDX 100, the QQQs. This is the one that has, over 2,000 stocks, I believe. Made a peak in the monthly and then held the 9-period moving average, and now it's trying to come back. This is very important because if you're looking at the weekly chart, very unusual pattern. This is a very wild trading kind of pattern. If you look at the QQQ, oh, whoops, I wrote it in the wrong place. You'll see that this is pretty much the same thing because the Qs had, let me see right here. Look, that a 12% correction from the high of the 26th of January at 170.95 down to the low of 150.13 on the 9th of Feb, runs up to a higher high, 5 points higher, 175.21 on the 13th of March, pulls back to the 4th of February low, 4th of April that should be. Oh, I wrote that wrong way around. That's the old South African way of doing it, the English way. That should be 4.280. I wonder what was wrong there. To 153, that's about, what was that, 12.7%, then 12.1%, and now it's coming back. So we might, see, this is what's so fascinating. We might have seen a good chunk of the consolidation by the two big pullbacks that in total percentage, this would be like 20, almost 24%, way over bear market material of 20%. So it's cumulative. And in this process, I'm going to come back to the composite index in a moment, the SMHs, which have been leading the charge up and down and up and down, had a much bigger rally from the 93.88 high, so 93.88 low of the 9th of February on the daily chart to the 114. I mean, think about it. That's 21 points on the way up. I didn't even put the percentage on the way up to the high of 114.55 on the 13th of March. And then it came back not to 93.88, the low of the 9th of February, but it came back to 96.47. I think that's a 6. It should be a 6. 95, 6 or 5. I think it's a 5. Yep, 95.47. And that was the low of the 25th of May, down 16%. So what we're looking at here, so the way up was a bigger percentage than the way down. And what's really important about this is that now we've had a rally, gone to 107.37, pull back sharply today, gap down, And we remain long. For my subscribers, we've had the 3 times long. It's had a monster, it had almost an 18% rally yesterday to the high. Now it's giving back. I expected that it would give back some. We've taken some profits. But in the meantime, back in the range, if it holds nicely here, instead of breaking underneath 102.80, that's at 104.45, if it can hold over the next 3 days and stabilize, we could have a rally Thursday or Friday. I'm not sure if it can go above 107.37, but that's going to be the key to internal strength. Because if there's no internal strength and we cannot rally back, the SMHs, the Semiconductor Market Vectors ETF, helped us on the way up to all-time highs, and then down, the correction, then back again. And then there was that one time where SMHs didn't go back to the high, with the QQQs making a high, and that was where we had the sharp dip. And now all of a sudden what we're looking at is that the SMH's weekly chart, has the potential for a double head and shoulders pattern, one of my least favorite patterns, because if you don't recognize it way in time, it's too late. By the time it breaks down, that would be underneath 93, let's call it 93. And right now it's at 104, it's 11 points higher. So, nice bounce. Let's just see what happens. Now I can go back to the comp index. I want to show you something. Actually, I'm going to do this in a moment. Comp index is down 1.05%. Dow's down 0.95%. S&P is down 0.86%. You can see the whole ratio. IWM is down 0.11%. It just isn't. It's leading. It's holding well. And that's a big clue. And that's one of the reasons why I've been saying to subscribers that I'm beginning to look at the 23,300s as a very good base. Even if we make some kind of a top, maybe going to the down, the S&P peak Ds in the next few days, going to the end of the week. I'm watching it closely because the next correction is going to be very important in terms of how the IWM, because if the fund managers see that one of the indices is holding up very well and even leading, money starts drifting. And as soon as you see money drifting into a particular sector, especially if it's a broad sector like the Russell 2000, small caps, it means that there's a focus, and that gives you a good balance between weak and strong. All right, let's go on. What I wanted to do now is I wanted to go to gold and say that gold's down $26, down to the low of the day, $12.91. Remember, I've been saying I just don't see anything yet. I don't really see it breaking down unless it pushes way down below the weekly 200-period moving average of 1305. Gosh, it's now at $12.91. Now it's starting to show real signs of weakness. Silver is also, says gold is down 2%, silver's down 2.28%, much deeper correction there. Not good looking, and I'll tell you why. Look, the reason why we remain along the dollar is because that weekly chart has been improving to the extent that it's helping the monthly chart. And as long as I see that, we want to stay long the dollar, and until I see a change of character in the EUR-USD, the euro-dollar currency pair, which is just now testing the left side low, is at 1.186. Weekly chart has 1.175 as the target of key support in the 200-period moving average. And if you look at the USD JPY, which I didn't look at yet today, it's going to be a surprise. It needs to be rallying. It is rallying, breaking out. It is at 110.27. And what I've been saying for a little while is if it's able to close in the 110.20s above the 200-period moving average in the weekly of 109.15 and the daily is 109.53, push away from that. All of a sudden, you've got a propellant in the 200-period moving average rather than a repellent or a magnet. So this is early in the week. It's only Tuesday. And I'm looking at this as a potential for, this is right now, new leg C to the upside. A, B, leg C. That becomes a down arrow. And I might have to change this, but this is what I'm pretty convinced at this particular point through my looking at the turnaround in the weekly chart I like this. I think it's going higher. So leg C in the yen, USD, JPY, and leg C in the dollar. And that was a Chapman Wave instant restart. Okay, now we need to look at crude oil. Wow, what a lot of things to do before we really get started. Crude oil is making a leg F. It should really be a C in conjunction with the others. I'm calling it a leg F for now. Because this really looks like the low. It goes A, B, C, D, E, F. I'm calling it an F. It could recycle, could do a lot of things. It's above the 9-period moving average, above the 200-period moving average in the weekly. 70.69, down 27 cents. I wouldn't be surprised if it has a bit of a high-level consolidation between 68.50 and 72.40. We'll be watching this closely. I want you to take the next segment, take a little time to talk about TLT, which is breaking down as we speak. Basil Chapman, Tiger Technicians Hour, and we'll look at some of the questions in the
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Just to cover something real quickly. Yesterday I had a stock. Why is this not notating? This is not the one. No, this is, yeah, Marmad. That's it, Marmad. And I had yesterday, there was a spec in that was mentioned in the den, and I said this is a marijuana type stock, and it's a very specialized thing, and if you're going to go into it, you need to be aware that anything can happen. It has to be treated like a long-term option. Well, today it went high. Well, yesterday it was, I think, at 1.26 or 2.8 when we were looking at it. I put that leg D there. Now I have to move the D all the way up to 1.49. So it's had that move. So now it comes along, another spec, Mr. Speculation there in the den, and he wanted to know about MPVD. What, you got the alphabet going there, Mr. MP? Now it's MP instead of MR. Okay, MPVD, yep, another one. No volume, I mean, look at this. 31,000. You could book an appointment to get some stock. But yeah, you do this sort of thing, but don't make a whole portfolio out of these $2 stocks and $3 stocks. That's just, you can do it if it's a speculative, say 3%, that you're just saying, you know, I'm going to have a whole mix of things that even if just one of them made a 10-bagger, it would just cover the mistakes of the others, or at least a couple will be holding steady and some will be gone or way lower. But the one big one will make a difference. So yeah, just as long as you're thinking like that, I have no problem. This one is looking much better, and it's called MPVD, up 15 cents at 275, up 5.77%, and its name is Mountain, not Mountain Dew, but Mountain Provence. Mountain Provence Diamonds. I bet it's Provence because it has to be fancy when the price is this low. So yeah, just be careful, that's all. Now, what I want you to do is to look at, okay, I said I'd look at the TLT. The TLT monthly is really this H pattern. Remember here we go in Chapman wave. This is one of my first chapters, the arch formation, chapter 13. Wow, I spent a lot of time on both this and the cup formation. Look, this is the pattern that creates a left side, right side price time match. This is where I learned the expression, you know, how people say, what is it, elevator up and the escalator down, escalator up and the elevator down, what it is. Meaning that the speed to the downside is always way more than the upside. No. There are, most of the time, unless you get into a crash mode at the bottom of a move that's coming down, most of the time, the number of bars to the upside can be matched to the right side. Look. This is a very good example. BBH way back in 2004, the biotech holders S&P went up very nicely, up, and had the same number of bars at a 90-degree move to the one side, 90-degree move to the downside. There was a Chapman wave inside wedge. So that's really important to keep in mind. It happens all the time. Sometimes you have to find the plumb line. That plumb line is not the top. And in this case, the plumb line said we've got to move it a little bit to the middle. Yeah, at the E rather than the F. This is the S&P back in 2005 when I made my CD. And in this particular instance, it did make a beautiful left side, right side. When that plumb line was moved to peak F, it turned out to be an exact replica of number of bars to the left to the right. Now, what's really interesting is that there are a whole bunch of techniques within this that I call the Chapman wave techniques. But what we're looking at here is, if you look at that peak C, the plumb line of peak C, look what's happening. We've already matched the this particular trough B at 116.49 to the low that was made at 116.51, a little higher up, right there in February of 2018. Then it tried to have another little rally, and now it's pulling back yet again. So this is very important in the TLT. Now, that's just one aspect. That's monthly, long term. This is really what I wanted to show. Here's my triple yield chart. Have a look at this. The 30-year is up 70 cents at 31.99. It is within an eye blink of the 32.21 recovery high that was made back in, I should have written down, I think that was February. Yeah, February, the week of the 23rd of February. There's a weekly chart. High was 32.21. February 23rd, right. So we made the peak C1, C2. Very often you do that, you're going to probably make that leg D, and here it is, almost at D. But wait a minute. This is the most important aspect that we're looking at. You've made new recovery highs in the 10-year. It's in leg F. It actually looks more like an F/B. And as far as the 5-year at 29.08 at a new recovery high, this absolutely looks more like a B than a G in the weekly chart. Yields are going higher. And that's the thing that's going to be the tip-off in the market at some phase that says, watch out, yields are a factor. And you're going to see that in the various indices that are interest rate important. Now, let me go to this right here and show you something even more important. The TBT didn't have the courage actually to do that because it looked so far away. At 37.50, it looked like, wow, it's going to take a while to get to leg C above 39.29. No, I think it's there. It's, look, 38.99. It's an eye blink away. Pop, it's going to go there. And that'll start a new gray leg B in the weekly, but actually it's really going towards the high of 39.86 that was made the week of the 23rd of February. Remember, we just looked at that. And that would start leg D in the weekly and leg C, gray leg C in the monthly chart. I have to tell you, don't ignore the fact that higher rates are coming. I believe they are coming. Okay, questions. Usual question, Boeing. Where is Boeing? Boeing is down 2.5. It's sort of struggling here. This might become a G and not a B in that last peak. I think it's going to become a G, even though the stochastic's at 82%, the MACD is good. I'm watching it closely. I do think that Boeing will not make a new high in May. In fact, it's probably going to start making lower lows very soon. It's my thinking, could be totally wrong. Next question is X. So USX trading very nicely down, just 38 cents lower at 35.93. It's moved very nicely to a single leg A to the upside. The weekly chart is improving. It's not great in the monthly chart. So, it needs more time. So I'm watching I'm watching X, which is U.S. Steel. My thinking here is that U.S. Steel is not really going anywhere at this particular time just yet. A little later on, it could be ready for a bigger move up. Next question I had was, so just to go to the question about the aftershocks, this is all part of that process. Remember that I was showing you in the Chapman wave, lowercase h keeps coming down. Eventually, it just runs out of downside energy, but it doesn't really have upside energy other than to have a bounce. And you can bounce once, that's the h, then you can lowercase h, then you can bounce twice, that's the lowercase m. And what happens at the left side low or the left side arch high, that really is important. So I had a couple of questions here. AUD, this is the USD, AUD, I think I just did it the wrong way around. It's AUD, Australian dollar, and US dollar. Yeah, it's the same thing, testing the left side low, a little bit stronger than the others. Had a question here, Basil, did you cover the euro? I did cover the euro, USD, I'll just do it again. The euro right now, I said that it was testing and so far is holding the left side low of 1.182 that was made on the 9th of May, and today's low is 108.20. I'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So, so we're looking at a question that I had. So GT says, let's see, gambling legality to be determined by state and marijuana to be legal in Canada. So this is part of my mega moves that I talk about. This is part of the final coda phase that I'm talking about. This is where legislation gets passed. This is like, if you go back to the 20s and you had prohibition, etc. And then you have the loosening of prohibition. At the very same time is that you can read stories, and you'll read stories about how for the first time women felt free to smoke and to drive cars and to go out and be out late at night. But it was really a difficult thing for a woman to be able to do that back in the 20s. And that is comparable in so many ways to the socio-political aspect that I'm looking at now. But even more important, the legalization of marijuana throughout the country in the different states, slowly, one by one, and the passing of this, the sports gambling, to me, these are outlier events that happen just once in historic occasions. Why? Because it takes culturally decades before there's a breakdown of what the normalization would be to say, hey, gambling of any form, it's just the outcome in so many cases is so negative that it becomes a morality issue. And as far as marijuana is concerned, to me, I've never smoked at all, ever. So it doesn't really bother me. I've never felt the need to do it. So I'm talking from an outsider's point of view. But what I am saying is that the passing of legislation of both of these has more to do in the long run with money that the states are going to spend, that they think they're going to have, and then at some point they won't have because that money is being spent in the wrong way. I'm looking at this, and I'm looking at medical consequences, psychological, a whole bunch of consequences in the future, a long time, 8 years, 10 years, 15 years. It's not a morality play we're looking at. This is just the way the market unfolds. It just never fails. So the states are going to have more money now. They've already got more money than they've ever had with the real estate booms in so many different states and cities and counties and towns. And they've started to incur fees for everything. I had a driveway expanded by just like a foot. That's all. I mean, I didn't even have to talk to them. I decided I better do it legally because when you want to sell eventually, it becomes a big deal. So all of a sudden, we've got this going on that fees for everything. And what they're doing, they're talking about having to override budgets because they are still spending too much. Hey, this is going to not end well. I've got a phone call right here. John in Philly. John, how are you?
Hello, Basil. Thank you for taking the call.
Yes, pleasure.
Basil,
You
I
would
wanted
like
to
to
put
look
a
at-
question directly to you regarding the NASDAQ composite, which you thoroughly went through earlier. And so I'm looking at your chart work, actually, the monthly, weekly, daily on Tiger TV, and have this question. Or first an observation. I observe on the monthly, weekly, daily, I've got Chapman wave, peak E, peak G, and peak D all in place. In addition, on the composite, I see on that weekly charts, I see that the high yesterday, up there at that 74.58 high on the composite,
Right.
tested but did not close the gap of that daily chart island top formation that we have back from March.
Back on the
My
19th,
question,
yeah.
with those
Okay.
observations, looking at your Chapman wave tools, what, if any reason, can you share with me that tells me don't look at this and call that a top with a sizable decline dead ahead? What's there that says not to do that, please?
Actually, let me just, can I rephrase that for a moment? What I want you to say is if you are looking at an extended move to the upside, and what's fascinating about this is that basically from July of 2016, the composite index spiked above the 9-period moving average, and ever since then, about 4 months later, it tested it once but closed sharply above it, and you can see that white space because it ran the 9-period moving average. Usually I say walk because it tests and it keeps bouncing off. This time it's as if there was another a moving average above it, and that moving average above it basically was the support level. Then all of a sudden, you got in February, you got the spike down to the 66.30 level, and that touched the 9-period moving average. Then it rallies back up, makes a new high right there in March. It goes to 76.37.27. Now it's testing once again the 9-period moving average. But what's fascinating for me is that although I'm doing this a little reluctantly, I'm only doing it as a visual because it really isn't yet the oval pattern that I talk about when I'm talking about the Chapman wave stalk leg formation. This is something else. All of a sudden I'm thinking biblical. I'm just trying. Who's the guy with the slingshot? A Goliath. Wait. Moses? Who was it? Moses that slew Goliath? Well, one of those guys in the story, and he swings the thing and he shoots off the slingshot, whatever it is. You see the volatility that's being created over here when it went to that peak F back in the week of the 26th of January. That was the top of the S&P and the Dow, and then it drops sharply, and it drops, I think that was about 18%, and then it rallies even more. It goes to that peak that I've called G/A, probably a G for now I'm calling it, and it goes to 76.37, and then it comes back down, and now it's back up. This kind of volatility creates an oscillation that starts to have an upside barrier and a downside support cushion. If it breaks either one of those, it says it should continue in that direction. I'm thinking slingshot momentum that hits a barrier and then gets propelled in a different direction. So here I am, and I'm going to make it real clear. I'm talking long term because I know this is part of the question that you have. The long term, at any point in the next 3 months, if the composite index trading at 73.50 right now doesn't have to break, it doesn't have to close there. It just has to break above 74.22. If it does that, any day that it does that, that monthly chart is really broken to the upside. It doesn't have to close there. And anytime it breaks, I'm going to first go with this low that was made in April of 68.05. Let's call it 6,800. A close below that says you're pretty much going to test the low that was made back in February, and that could even get uglier. So that's the long term. My eye says that the monthly chart is still within a buy mode in all the indices, and that I don't have anything especially since I have to base it on the short term, the daily that goes to the weekly, that goes to the monthly, to say that there's anything but a consolidation going on right now. Does that answer your question a little bit?
Very thorough, Basil. Thanks so much for your time.
Thank you very much, John. We'll be right back for the final segment. The Dow is now only up 160. I mean, down 160. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Yes, so I just wanted to show GBTC is a question. This is that. This is the ETF that you can trade. The Bitcoin. Bitcoin doesn't look so good right here. It's pulling back, and I'm just saying that I don't see anything right now in the GBTC. It's trying. Look, there's the arch formation, made a little smaller arch. I just don't see anything yet. I think that until people start talking about going down to the lows again, I don't think we're going to be going, certainly not to the 40,000, 50,000, 60,000 that people are talking about in the Bitcoin area since January. I just don't see anything there. Now, I heard talk yesterday, or I had questions about about RHT. I think it was RHT. Yeah, Red Hat. So I did an analysis of this, and it was in a leg F yesterday, and the daily chart, and it had a weekly chart, leg E, and a leg D in the monthly chart. And then I hear that Dave White had got an email saying Dave White had a fantastic trade on the in his newsletter about the options. And congratulations, Dave. That was fantastic. On Red Hat, it was just extended. I didn't get the F until today. because it was in leg F, and there it is, peak F, huge pullback. Dave has a webinar coming up tomorrow night on options. Man, if this is the guy that does options fantastically, this is the time to do it. Bravo. Just a great trade. And I think last week you had a great trade as well. Oh, man, I tell you, that's wonderful and timely because of your webinar. So, folks, go to the front page of TFNN. Real quick, is it time for us to, in my newsletter, to start looking at the DOG? Big move up today at 1474. This is the 1-to-1 short. No, we still remain long. I'm still thinking there's going to be just enough upside for us to make a decision in our own time. So let's see what happens over the next few days. We should be basing it, I'd say, the 1.5 to 2 day consolidation. We've started today, started yesterday during my show. Let's see what happens. I still see enough energy to the upside. The IYT is the, there it is. IYT is the iShares Transportation Index. It is holding quite nicely. It hasn't broken out. There's the H pattern. It's getting to the top of the range of the 195, 197 area. We'll watch this closely. Folks, stay tuned. We've got Steve Rose, Dave White, Tom O'Brien, and Andy F. What a great day of shows coming up. Have a wonderful day. I'll be back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.